Good morning, friend. US consumer prices likely remained high. Households paid more for some tariff sensitive goods, but short one we may be started for goods CPI X transportation contribution to goods recreation commodities. This is the sharp. You will find deep analysis, 50 sentences phrased as question mark. Could the persistence of higher US 2025 largely stem from the gradually pass through of tariffs into retail goods? Why are tariff sensitive goods like apparel being as key drivers of the price rise? How much of the recent CPI increase, estimated 0.4% month, attributed to the effect of these higher import duties? In what ways are businesses observing some of the cost burden rather than costs? Why has the pass-through of tariffs not been immediate or complete? What role do log effects prices play? To what extent it could the previous build-up of higher import cost to consumers? How significant is the estimated share of tariff cost that US consumers are already absorbing? What portion of the duties have firms taken on or cost a step up in tariff pass through in the coming month? 60% of total tariff cost. How does that costed pass through translate into core CPI inflation? What does the Federal Reserve's own research about the size of the tariff pass through? According to Fed estimates, how much have core goods PCE inflation? How much core goods PCE inflation? How much of that core goods PCE effect spills over into broader core or only part of the index? What do micro data from the Atlanta Fed? Could an additional 10% tariff on Chinese imports rise consumer prices on everyday goods by? Why might pass through be do competitive pressures the possibility why firms don't fully rise prices? Adjustments be spread over time due to strictness. How do tariffs on intermediate goods over time via production cost channels? What role do delays in price adjustment play in? How do supply chain dynamics might longer delivery times force firms? Is there evidence that the increased uncertainty why have some exporters not fully? Could limited prices cutting by exporters be? How much of the tariff cost is being shared by US? If US consumers are observing a significant or lower compensation growth in firms over time, Is the recent rise in gasoline and food prices adding to the inflation pressures alongside, especially flagged in the report is it only tariffs or also supply shocks, e.g. tariffs? How might these slow moving effects of tariffs interact with easing service inflation overall CPI? Could the government shutdown at the time of data collection could underestimate the true inflationary effect of tariff? How does the partial tariff pass-through challenge the price level jump rather than ongoing inflation? Could the frequently with which firms change prices be increasing, amplifying the firms coordinating price increasing not only because of tariffs but also? Why does research suggest about the effect of tariffs on? Could the Fed plan interest rate? Should the central bank worry that tariff-driven inflation different could further tariff increases or new trade tensions risk accelerating this pause? Are there structural risks, e.g. impact of this inflation on household budget, especially for lower and middle income families who spend more on? How might consumers respond if prices of key goods like apparel and coffee continue switching brands or delaying purchases? Long can they sustain that exporters might further cut their margin or lower export prices to remain competitive, slowing to pass through? What is the risk that firms stop observing? In inflation remain elevated, could that force this again depending on the data? Finally, how should economists, investors and policymakers monitor the evolving interplay between tariffs, import cost and consumer inflation going forward? Please like, subscribe and comment. Another video are there, that is your heart touch video, the inflation. You will find out what is
the Consumer Price Index, or CPI, is a key measure of inflation that tracks changes in the prices paid by consumers for goods and services. For September, forecasts indicate a monthly CPI increase of 0.4%, with headline inflation expected to rise 3.1% year-on-year. Core inflation, which excludes volatile food and energy prices, is projected to climb 0.3% for the month, and also 3.1% compared to the previous year. These figures are closely watched by policymakers and economists as they reflect underlying trends in the cost of living. Importantly, September's CPI data plays a crucial role in determining the annual Social Security cost of living adjustment, which affects millions of beneficiaries. Accurate CPI estimates help ensure that Social Security payments keep pace with inflation, supporting retirees and other recipients in managing their expenses. The ongoing government shutdown has led to significant delays in the release of key economic data, most notably the Consumer Price Index, or CPI, for October. With many federal agencies unable to conduct their usual field operations, a substantial portion of price data, typically gathered through in-person and telephone surveys, will be missing. This raises serious concerns about the reliability and accuracy of the reported figures, as errors may persist for months due to gaps in the housing panel sample. For policymakers, the lack of timely and dependable data complicates decisions on interest rates and economic support measures. Beneficiaries who rely on programs like Social Security face uncertainty in financial planning, as the cost of living adjustment announcement is postponed. The ripple effects of these data disruptions extend to investors and economists who must navigate increased uncertainty in forecasting and strategy. Overall, the shutdown underscores the critical role of uninterrupted data collection in maintaining economic stability.
And depth analysis of the images. Some images are shown here. What that you will see, that is the images. What is that you will see here? Adjustment report. Is it correct? COLA increase. Social Security boost. Understanding CPI trends. Inflationary pressures mount. CPI data rising. 3.1% CPI increase. Price are up. Inflation rate rising. CPI September forecast. Price surge higher. Inflation rate rising. This is the YR US consumer prices staying. Find what is the mention, that is inflation lingering on. September price shock. Prices still high. Shutdown CPI concerns. Economic data delayed. Data in jeopardy. Another some images also. This is the one of the images. Market march down. Goldman Sachs. And please like, subscribe and positive or negative comment. Thank you very much once again.